Hi guys, welcome to my channel. In this video, we will talk about what is life insurance. So make sure to watch the full video. Life insurance is a contract between an insurer and a policy owner. A life insurance policy guarantees the insurer pays a sum of money to named beneficiaries when the insured dies in exchange for the premiums paid by the policyholder during their lifetime. For the contract to be enforceable, the life insurance application must accurately disclose the insured's past and current health conditions and high-risk activities. Types of life insurance. Many different types of life insurance are available to meet all sorts of needs and preferences. Depending on the short or long-term needs of the person to be insured, the major choice of whether to select temporary or permanent life insurance is important to consider. Term life insurance. Term life insurance lasts a certain number of years, then ends. You choose the term when you take out the policy. Common terms are 10, 20, or 30 years. The best term life insurance policies balance affordability with long-term financial strength. Permanent life insurance. Permanent life insurance stays in force for the insured's entire life unless the policyholder stops paying the premiums or surrenders the policy. It's typically more expensive than term. Term vs. permanent life insurance. Term life insurance differs from permanent life insurance in several ways, but tends to best meet the needs of most people. Term life insurance only lasts for a set period of time and pays a death benefit should the policyholder die before the term has expired. Permanent life insurance stays in effect as long as the policyholder pays the premium. Another key difference involves premiums. Term life is generally much less expensive compared to permanent life because it does not involve building a cash value. Before you apply for life insurance, you should analyze your financial situation and determine how much money would be required to maintain your beneficiary's standard of living or meet the need for which you're purchasing a policy. For example, if you are the primary caretaker and have children who are 2 and 4 years old, you would want enough insurance to cover your custodial responsibilities until your children are grown up and able to support themselves. You might research the cost to hire a nanny and a housekeeper, or to use commercial child care and a cleaning service, then perhaps add some money for education. Include any outstanding mortgage and retirement needs for your spouse in your life insurance calculation, especially if the spouse earns significantly less or is a stay-at-home parent. Add up what these costs would be over the next 16 or so years. Add more for inflation, and that's the death benefit you might want to buy, if you can afford it. How much life insurance to buy? Many factors can affect the cost of life insurance premiums. Certain things may be beyond your control, but other criteria can be managed to potentially bring down the cost before applying. After being approved for an insurance policy, if your health has improved and you've made positive lifestyle changes, you can request to be considered for change in risk class. Even if it is found that you're poorer health than at the initial underwriting, your premiums will not go up. If you're found to be in better health, then you can expect your premiums to decrease. Step 1. Determine how much you need. Think about what expenses would need to be covered in the event of your death. Things like mortgage, college tuition, and other debts, not to mention funeral expenses. Plus, income replacement is a major factor if your spouse or loved ones need cash flow and are not able to provide it on their own. There are helpful tools online to calculate the lump sum that can satisfy any potential expenses that would need to be covered. What affects your life insurance premiums and costs? Step 2. Prepare your application. Age. This is the most important factor because life expectancy is the biggest determinant of risk for the insurance company. Gender. Because women statistically live longer, they generally pay lower rates than a male of the same age. Smoking. A person who smokes is at risk for many health issues that could shorten life and increase risk-based premiums. Health. Medical exams for most policies include screening for health conditions like heart disease, diabetes, and cancer, and related medical metrics that can indicate risk. Lifestyle. Dangerous lifestyles can make premiums much more expensive. Family medical history. If you have evidence of major disease in your immediate family, your risk of developing certain conditions is much higher. Driving record. A history of moving violations or drunk driving can dramatically increase the cost of insurance premiums. Life insurance buying guide. Life insurance applications generally require personal and family medical history, along with beneficiary information. You will also likely need to submit to a medical exam and will need to disclose any pre-existing medical conditions, history of moving violations or DUIs, as well as any dangerous hobbies such as auto racing or skydiving. Standard forms of identification will also be needed before a policy can be written, such as your Social Security card, driver's license, and / or U.S. passport. Step 3. Compare policy quotes. When you've assembled all of your necessary information, you can gather multiple life insurance quotes from different providers based on your research. Prices can differ markedly from company to company, so it's important to go to the effort to find the best combination of policy. Company rating and premium cost. Because life insurance is something you will likely pay on a monthly basis for decades, it can save an enormous amount of money to find the best policy to fit your needs. Benefits of life insurance. There are many benefits to having life insurance. Below are some of the most important features and protections offered by life insurance policies. Most people use life insurance to provide money to beneficiaries who would suffer a financial hardship upon the insured's death. However, for wealthy individuals, the tax advantages of life insurance, including the tax-deferred growth of cash value, tax-free dividends, and tax-free death benefits, can provide additional strategic opportunities. Considerations before buying life insurance. Research policy options and company reviews, because life insurance policies are a major expense and commitment. It's critical to do proper due diligence to make sure the company you choose has a solid track record and financial strength, given that your heirs may not receive any death benefit for many decades into the future. Investopedia has evaluated scores of companies that offer all different types of insurance and rated the best in numerous categories. Life insurance can be a prudent financial tool to hedge your bets and provide protection for your loved ones in case of death should you die while the policy is in force. However, there are situations in which it makes less sense, such as buying too much or insuring those whose income doesn't need to be replaced. So it's important to consider the following. What expenses couldn't be met if you died? If your spouse has a strong income and you don't have any children, maybe it's not warranted. It is still important to consider the impact of your potential death on a spouse and consider how much financial support they would need to grieve without worrying about returning to work before they're ready. However, if both spouses' income is necessary to maintain a desired lifestyle or meet financial commitments, then both spouses may need separate life insurance coverage. If you're buying a policy on another family member's life, it's important to ask, what are you trying to insure? Children and seniors really don't have any meaningful income to replace, but burial expenses may need to be covered in the event of their death. Beyond burial expenses, a parent may also want to protect their child's future insurability by purchasing a moderate-sized policy when they are young. Doing so allows that parent to ensure that their child can financially protect their future family. Parents are only allowed to purchase life insurance on their children up to 25% of the in-force policy on their own lives. Hope you liked the video. Make sure to hit the like button and click the bell icon for more updates. If you are new to my channel, hit subscribe button